Before I start, I'd like to disclose the following. We are not financial advisors, nor do we provide financial advice. We are not getting paid to promote any services or product. There are two ways we get paid. For the free site, Google pays us 70% of the fee they receive from advertisers for clicked ads. And two, we accept donations, and those who donate receive a 1-year full access of the premium site. In this video, we examine Intact Financial preferred and common stock to see which one is best. We make the decision based on today's latest data. The conclusion will change over time based on changes to preferred and common stock, but the process of arriving at the decision is the same. For this video, I will use the premium site. Similar information can also be found on the free site. Let's go to the Intact Financial ranking page. All metrics and data analytics fields shown in this page are updated daily, Monday to Friday, based on the latest market data for Intact Financial. Notice the navigation buttons at the top of the page. These allow jumping to the start of each section, making it easier to compare information between each section on the page. Scroll down the page to review some of the metrics we use. Go to the section Intact Financial Common Shares Metrics. As you can see, the current yield on the common is 2.23%. In the section Intact Financial Overall Preferred Share Metrics, we see the following metrics. The lowest current yield is IFCF at 3.49%. The highest current yield is IFCG at 6.12%. The average current yield is 4.96%. And the 5-year reset average yield is 3.70%. Let's see the averages for the Canadian preferreds market and the insurance sector. From the menu, select Market Review. As you can see, today's average market yield is 5.4318%. Intact Financial's average preferred yield is about 0.5% higher. In the section Statistics by Sector, locate the insurance sector. The sector has an average current yield of 5.04% and reset yield of 4.20%. Intact Financial is lower in both of these metrics. Now let's go back to the Rank Intact Financial Preferreds page and the Rank Compare tool. In the section Rank Intact Financial Preferreds Compare tool, you can see that we have a lot of metrics, but for this decision, we choose to use the blended yield only. The blended yield is a projection of the average yield for the next 5 years. We will be comparing this to a similar metric of the common stock. To begin with, let's review the table by blended yield, the highest yield first. As you can see, IFCF Preferred has the following yields. Current is 5.22%, Reset is 5.22%, and Blended is 5.22%. So the best blended yield you can expect at this point from the preferreds is 5.22%. If you pick IFCF based on today's unit price and interest rates. Click on the button Common or Preferred. Here you can see that Intact Financial has a history of increasing the common stock dividend by 10.84%. This is based on a 16-year history of increases starting in 2005. It ranges from a quarterly dividend of 0.163 in 2005 to 82.9 cents in 2020. Looking at the dividend growth rate graph, you notice a consistent increase of the dividend. Based on the current compound annual growth rate of the Intact Financial dividend, I calculate the future quarterly dividend for the next 5 years to be 91.9 cents, $1.01.9, $1.13, $1.25.2, and $1.38.8. Assuming the stock price remains the same at 148.88 over the next 5 years, the corresponding yields will be 2.471%, 2.739%, 3.036%, 3.365%, and 3.730%. One last item is to check the short position. Currently, there is 0.84%. Let's see what the short position is on a few more preferred share issuers. Let's check Sun Life Financial. The short position over time for Sun Life Financial is 3.04%. Let's go back and check Manulife Financial. The short position over time for Manulife is 2.23%. Intact short position is much better than both of these, so there are no red flags. There are many metrics that can be taken into consideration when making your decision. Each investor will assign different importance to each metric. For this video, we are only using the expected yield for the next 5 years. Based on that, it's a clear decision. The best you will get from the preferred is 5.22%. On the other hand, the common has a yield of 2.23% and will provide you with increasing yields each year, projected to be 2.471%, 2.739%, 3.036%, 3.365%, and 3.730%. Thank you for watching and happy investing.